Welcome back. In our top business story, port operator DP World said a strong surge in container volumes in the first half of the year would result in a significant improvement in the company's profitability for the period. Gross volumes in the first half of the year climbed 11% to just over 26 million 20-foot equivalent container units, or TEU. In the UAE, DP World handled a record 6.1 million TEUs in the first half of the year. It especially profited from the strong growth in the Asia-Pacific region, its home market in the UAE, Africa and the Americas, state news agency WAM reported. The strong container volumes seen in the first half of the year will result in a significant improvement in first half profit after tax against the same period last year. CEO Mohammed Sharouf was quoted by Reuters. First Gulf Bank plans to raise $650 million from the sale of its first ever Islamic bond, also called Sukuk. That's according to a document from lead arrangers quoted by Reuters. Pricing of the bond is expected later today, and final guidance is at 200 basis points over mid-swaps, tighter than the earlier indicated guidance of 210 basis points, the document showed. The Abu Dhabi-based bank, controlled by the Emirates ruling family, is selling the bonds under a $3.5 billion Sukuk program that Citigroup, HSBC and Standard Chartered manage. Shore Capital returned to profit in the second quarter. It stood at 600,000 dirhams after a loss of 57 million dirhams a year earlier. It posted revenues of 36 million dirhams, up from 33 million dirhams, while total expenses fell 7% to 63 million dirhams. With the market conditions improving, Shore Capital will generate further momentum with its clients, build market share and start executing investment banking mandates, its CEO Samir Al-Ansari said in an emailed statement. Also, according to Bloomberg, the investment bank today holds a shareholder meeting to vote on a change to its board. It wants to allow more nationals from the GCC region into its controlling body, because currently the majority of the board members are UAE nationals. And also Emirates NBD, the UAE's biggest bank by assets, reported its second quarter earnings results. Net profits rose 87% to 744.5 million dirhams. The shares were up 0.7% on the DFM today. And also the UAE and the GCC stock markets ended higher today. Now, world business news. Rating agency Moody's cut Greece credit rating further into junk territory on Monday and said it would most likely give the country a default tag on its debt as a result of the second EU rescue package. Moody's cut Greece's rating by 3 notches to C8, just 1 notch above default, and the lowest rating of any country in the world covered by Moody's. After last week, Eurozone leaders and banks agreed that private banks and insurance companies would shoulder part of the burden of a second rescue deal. Procedures for the voluntary swap of privately held Greek government bonds for longer maturity paper will start in August, Greece Deputy Finance Minister said today. We earlier spoke to Tim Fox, head of research and chief economist at Emirates NBD, and asked him how Greece's second bailout will affect its rating.
As a result of the measures announced by the European Union last week, it does appear that Greece is likely to default, which means that private investors will face considerable losses or haircuts on their holdings of Greek government bonds. However, it does look as if the default will probably be relatively orderly as opposed to disorderly, which I think the financial markets had previously been fearing. I think that should help to limit the contagion from Greece to other vulnerable Eurozone countries such as Ireland and Portugal, although it has to be remembered that those countries themselves have their own significant problems in relation to debt and in relation to growth. I think Greece has certainly been provided a lifeline, which should tide it over until 2014, but it can also be seen that these measures perhaps have come a little bit too little too late. And the likelihood does seem to be that the Greek economy will continue to remain weak for some time to come, and that will mean that its ability to maintain and to sustain its debt payments will be challenging for many years ahead.
U.S. Secretary of State Hillary Clinton told a group of Asian investors on a trip to China not to worry about America's debt problems. Clinton made the remarks as U.S. lawmakers continue negotiations to raise the debt ceiling and head off a potential world economic disaster. Still, Republicans and Democrats are in gridlock over the details of the debt deal.
The political wrangling in Washington is intense right now, but these kinds of debates have been a constant in our political life throughout the history of our republic.
And that's what investors and mainly Wall Street is getting fed up with. Their patience with Washington on getting a debt deal done is starting to wear thin. With doubts arising, it will be sustainable.
Right now, I think most investors still believe that Congress will approve some sort of an 11th hour deal, but the closer we get to the deadline, the less confident Wall Street is that it'll be a good deal.
Before we go, here's a quick overview of the oil and currency markets, and after that, we have the day's sports news for you.